Welcome back to Biz Talk TV. I'm your business guide and host, Michael Rager, on the Now Media TV network. Hey, come out. We got Kristin Gunderson. Kristin Gunderson's our favorite bookkeeper in the world. She helps us understand what we need to do as business owners to be successful. Today, she's going to talk about your numbers. We hear about your numbers all the time, and what does it mean? Kristin, go tell us what it means to know your numbers.
All right, thank you so much for having me on the Biz Talk Show today. I am Kristin Gunderson with Gunderson's Bookkeeping. I'm here to get all of your bookkeeping and tax questions answered. So the question that came in for this week is, everyone says that you should know your numbers. Well, what the heck does knowing your numbers even mean? And like, how do I even get started with that? So what that means is, real quick, you need to have your bookkeeping done, your financials done. You need to have that reconciled, up to date, so that you can be able to pull numbers from there to be able to get to your KPIs. Your KPIs are your key performance indicators that helps you determine how you want to be valuing your business and what items you want to be looking at to be able to get to your goal. And I'll go into more of these later. And then the last thing is that you also want to be able to look at these on a consistent basis, like monthly, to be able to see the trends that are happening in your business and if you are on target to reaching your goals. So the first one is having updated and accurate financials. Well, one, you need to be doing your bookkeeping or have someone do your bookkeeping, but every single accounting transaction is linked to your financials, at least one of your financials. So that means that every time like you make a deposit, you go to the store to buy office supplies or put fuel in the company vehicle, all of those transactions need to be put into your accounting system, whether you're using QuickBooks or QuickBooks Online or Xero or whatever other accounting platform you're using. Those need to be entered in, they need to be reconciled, and then those financials need to be done on a monthly basis so that you can figure out what you need to start keeping track of. So the next one is KPIs, those key performance indicators. Like, you need to know, like, what are your goals in your business? Your business, like, you may want to increase revenue by 30%, or you may want to be able to hire another salesperson, another worker bee. You may want to increase your sales leads. It could be, you could have goals in financial area, operating, and your sales and marketing area. But once you have those goals, now we need to decide, how do we keep track of them and what do we measure, like what KPI is best to measure, and there's going to be several of them, in order to be able to see that we're reaching our end goal in our business. And every industry will be different. Like, you will have to determine what is important for you to be able to measure in your business. I did want to go over 3 KPIs for you, though, that I think are important for running any business, for knowing your numbers. So the first one is contribution margin. What is a contribution margin? It is your revenue minus your cost of goods sold and minus your direct labor. Now, the reason why contribution margin is so important to be keeping track of is because your cost of goods sold and your direct labor, those items can have a big impact on your bottom line, which is your net income. And those items, like, we can easily, if we need to add people to increase our revenue, we can do that. If we need to maybe lower our cost of goods sold, so those are ways that we can, knowing those numbers is, we need to know what to do with them to be able to know how to reach our goals, right? But if we don't have a baseline to get started, like, that's something you want to do. So you may want to go back to like January or even last year and figure out what your contribution margin is, and then do it for every single month, for that you have, you can see the trends in your business, okay? And how it's affected your revenue and how it's affected every other goal in your business. So the next KPI I think that's pretty important to be keeping track of is your net income margin. That is your net income divided by your total revenue. And that will be a percentage, and that is another item that we want to go back and do historical data on. So do it for a year or two, and then do it for every single month this year, and do it monthly going forward, so that we can see what that number is. And what that number means is, once you have that percentage, you can see how much of your sales may potentially turn into net income down the line. A really good rule of thumb for your net income margin is being able to look at that, and if you are at a 15% or higher, great for you. Like, your business is doing awesome, you have a really healthy business, you are on the right path. Keep on doing what you're doing and keep it up. You're doing great. The other one is a 10% net income margin. If you have a 10%, give or take right around that number, your business is healthy. Like, you have a great business and it is right in line with where other healthy businesses are. Now, if you are at 5% or less in this number, like, your business is on life support. Like, you need to call 911. Just kidding, don't call 911, but like, you need to take immediate action in your business to either increase your revenue, the sales coming in the door, or to decrease your cost of goods sold or your other expenses that are in your business. So that will give you a real general idea. If you're 5% or below, like, your business needs help. If you're 15% or higher, like, you're doing awesome. 10% is kind of the goal. Like, if you can get there, you're in good shape. The last KPI that I think that you should be looking at is your working capital. And what this means is your total current assets minus your total current liabilities. And this number is important because this number is more important to look at than your bank balance number, because your bank balance could be inflated or deflated based off of a couple of things. Like, for one, your business could be doing really well, but you have a really low bank account because you bought all this inventory. So your sales, like, all of your bank balance is basically tied up in inventory, which could lead to potential sales down the road. So that is another reason why to be looking at your working capital. Another reason is you could have a really high bank balance, but your business isn't doing that great. And one of the reasons why this could be is, say you just went out and got a line of credit or other like bank loans or something like that, and you put them all into your bank. Well, now your bank balance is really high because you just put all this money into the bank, but yet you owe that to someone else, so you're gonna have to pay back with interest. So that is why I recommend looking at your working capital number compared to just like your bank balance number. Some other really important numbers to be keeping track of that you will want to know for down the line is, what's your average job? Like, how many clients or invoices, jobs did you have during the month? And that way we can take our total revenue divided by how many jobs you had to get your average job. So that will be really important to know, especially like when you get into budgeting. You want to know what that number is. Some other good ones are, and then if you have different segments like in your business, you will want to divide them up by segment. Like, for instance, I have a cleaning company and she has residential cleaning, and then she also does like B&Bs, Airbnbs, so like rentals, and then she has commercials. Well, we started keeping track of these numbers for her by industry. Like, so all of the private cleaning companies, like, we know what the average is for the privates, we know what the average is for the average job cost is for the rentals, like the Airbnbs, and the average for the corporate. That way we know which section of our business we want to focus on growing, or maybe we need to do a price increase. So that's why knowing like your average job price, like how much revenue you bring in, will be really good. And then another like key performance indicator that you might want to keep track of is knowing what, and this is on the sales and marketing side, knowing what your conversion is from, like, if you have a sales lead, how many of those turn into a new client? Or if you have a sales lead, how many of those turn into a prospect client where you're actually meeting with and giving an estimate or a quote out to? And then how many of those prospect clients turn into a new client. So those are really good numbers to have for that. When you are going over your company's goals, you can figure into, so like say you want to grow your company by 30%, and you figure out, oh, okay, that's, I don't know, X amount of money by growing my company by 30%. That's X number. And then you need to figure out, well, how many jobs, now that I know how much I want to grow my company, like how many jobs is that a month in order to make up that amount of money? And then once you know like what that number is, then you can figure out, well, how many people do I need to talk to a month in order to get all of those people to come talk to me and turn into a client, right? And then you can even back into a little bit farther and be like, well, in order to get to be able to talk to those number of people, how many sales leads, like do I have to, how many people do I have to be looking at my information that are maybe interested or maybe referrals in order for me to even talk to? So that is all part of knowing your numbers. Like it's not just having your financials done. It is like a wide variety of numbers that you will want to know in order to be able to grow your business. Like that is the key thing about knowing your numbers. Like you cannot grow your business unless you know your numbers. And that may be different for every single company of what their numbers are, but those KPIs are whatever is important for your end goal, your goals for your company, and being able to figure out how to measure them to be able to make sure that you are on track to reaching your company's goals for the year, the quarter, or the month. So once you have those KPIs figured out, like whatever they may be, I gave you like 5 examples of what they could be. The next thing you need to do is you need to come up with like a scoreboard or a dashboard that you can look at and fill in the numbers every single month so that you can look at the trends, like look at the trends for by month, by quarter, by year, and to make sure that you are on track with getting your goals, hitting your goals at the end of the year, or the quarter, or the month. Like I know that was a lot of information. I just really love this stuff and love going, like this is the part of the business that I love doing with my clients. I love going over the numbers with them and that they can make better business decisions, strategic business decisions to be able to grow their business. If you have any questions on anything that we went over today, feel free to reach out to us. You can literally text the word HELP to 855-798-3350. Again, that's text the word HELP to 855-798-3350. Or you can reach out to us on social media. We're on LinkedIn, Facebook, and Instagram. And that is everything that I have for you today. Thank you so much for having me on the Biz Talk Show.
Kristin, that's such good information. I'm telling you, as a business coach, I love it. One of the things I do with my clients is we're looking at our KPIs and our numbers weekly, monthly, quarterly, and annually. And we set up 5 to 6 KPIs so we know what we're going. We're pushing them through. A lot of them are on financials, and we got to get them to understand their numbers. If you understand their numbers, you're going to go ahead and you become a rich business owner.